All right, what's going on, guys? It's Luke here. Today, we're going to run through a weekly outlook for the week coming up of January 26th to the 30th, 2026. I'm going to show you guys what I have marked out on my charts, just kind of like my ideas going into the week, and then we're going to go through the news really quick. Again, before we get into this, guys, Alpha Future Code LukeX will get you the best discount available. Link for the Discords in the pinned comment, all my social media in the pinned comment, description, all that stuff. So go check out all my links. And yeah, let's get right into this. So we'll start off on the monthly, kind of work our way down. Obviously, we have 6 days left on this monthly candle. Right now, we are bullish still, and we're maintaining that bullish order flow again on the higher time frame. We have been extended to the upside. Eventually, we probably are going to make some type of drastic retrace, but for now, we're maintaining monthly bullish order flow. We look on the weekly, and this is where it gets a little bit interesting. If you guys seen, we took out these weekly lows. We had a strong push to the downside, and a lot of people turned super bearish at this point. We got below those weekly lows, which I talked about, and we had a nice recovery back to the upside. But what you notice on the weekly is we are in more so a range on the weekly. We really haven't found direction since like November. We've just been kind of ranging, but we swept out some higher time frame sell side. We swept out the previous week's low. We swept out this weekly low, and then we got a nice recovery back to the upside. So in terms of draws and liquidity right now on the higher time frame, I have marked out my previous week's low, I have previous week's high, and then I have this weekly high right here, and then this weekly high right here, and then I have all-time high up here. Now moving down to the daily, as you can see, we had that nice sell-off at the beginning of the week. We obviously put in a new week opening gap, took out that weekly low, and then we had a nice recovery to the upside since Wednesday, Thursday, Friday, and we had a nice push back up, filling in that new week opening gap. So again, for draws and liquidity that are most relevant to us on the higher time frame, I have previous week's low marked out, previous week's high. I have this daily high right here. I have this weekly high, which are all resting right below this daily fair value gap. We also have a daily low right here, or a daily high, sorry, right here, but I'm not marking that out just because it's right below the gap. Above that, we have a small daily high, and then we have all-time high, but really this stuff is most relevant to us right now. I'll run over to ES really quick, run through my ES chart, which is very similar. But anyway, on the monthly, obviously continuing to maintain bullish order flow. Went on the weekly, we obviously came down, took out the previous week's low, took out that weekly low, and had a nice recovery. ES's chart does look a little bit smoother. As you guys know, ES has been leading bullish. We obviously had that SMT because ES put in a new all-time high, and as we know, NQ never did. So ES has been the leading index, but both have been moving very similar. So on the daily, same thing, nice recovery. We have previous week's low, previous week's high. We have this daily high right here, and then we have all-time high as our next draw on liquidity. So what's my ideas going into the week? Well, what do you notice here? We have a ton of buy-side liquidity leading into a daily untapped fair value gap. So when you see, if you guys just seen my trade recap from Friday, the 23rd, if you guys see my trade recap, you see that I targeted the low resistance liquidity leading into a higher time frame fair value gap. In that case, it was the 4 hour. Now, when you have a lot of stacked up highs or lows that lead into a gap, price loves to aggressively push through into this gap. So that's what I'm kind of favoring right now. Am I saying it's going to happen, right off the bat? No, but it could. So that's just one scenario to keep an eye on. Okay, the bullish scenario here is that maybe we get a pullback, like we go to the 4 hour. We're really just kind of chopping around. There's real no like direction here. Maybe at the start of the week we could respect this gap right here, but for me in the bullish scenario, maybe we do get a small pullback. We continue to rally up, and then we trade into this daily fair value gap. Now, again, when we have all of this low resistance buy side liquidity leading into this gap, that's telling me that we probably aggressively want to flush through and tap into this gap and continue to the upside. So that would be my number one bullish scenario. Maybe we see a slight pullback and we just continue up, and we can target that gap. Now, from that gap is going to be a key area for us to watch, because there's two scenarios that can happen in this gap. Okay, we could easily run through a previous week's high, run through these daily highs, these weekly highs, and then we could see a sell-off from this point. We could be able to catch some retracement shorts here, right? Scenario number two, you just aggressively displace above this gap, retrace, and then we head back to all-time highs. So that's the scenario if we do end up breaking out of this range. Like if we zoom out right here, this just looks pretty bad on the daily. I'm not going to lie. Obviously, there's opportunities to catch as we're trading on the lower time frames, but looking at this right here, it looks pretty bad. I'm ideally hoping that we do get out of this. You know what I mean? So in terms of a bear scenario, maybe we get a slight manipulation higher. Maybe we take out the previous week's high, and then we just continue to rotate down before I move up. Now, I'm only going to flip super bearish if we start disrespecting bullish PD arrays, and we start respecting bearish PD arrays on like the higher time frame, like the 4 hour and the 1 hour. And if we get something like that, then obviously my main sell side target is going to be previous week's low, because that's the next major higher time frame target we have. Obviously, we have 4 hour stuff, like 4 hour lows and stuff in here, but that's going to be our next main sell side draw. So for me, scenario number one, maybe we get a small retrace. We continue to displace through these buy side draws, and we continue to tap into this daily gap. And from this daily gap, we see two scenarios. We see either a sell off from here, we respect it, we continue down, and then maybe we continue to trade up later, or it just leads to a full blown sell off. Or we go above, we trade above it, we maintain bullish order flow, we inverse it, and then we continue to all time highs. That would be our two bullish, short term bullish scenarios. Scenario number two, maybe we get a slight manipulation to the upside. Maybe we take out this previous week's high. We get a shift in order flow. We disrespect bullish gaps. We respect bearish gaps in the higher time frame. And our next sell side draw would obviously be the previous week's low. Those are the three kind of main, or two really main scenarios that I'm looking at. For bullish, we run through these highs, and then we have this gap to just kind of make our decisions from there and readjust from there. And sell side, maybe we get a slight manipulation to the upside, and we target our previous week's low. But right now, our main sell side draw is previous week's low. Our main buy side draw is obviously previous week's high. But when you have all these highs stacked up, it's something to kind of watch for. On ES, kind of the same thing. We're resting right below previous week's low. We closed pretty strong on the weekly, so I'd be watching previous week's low. Okay, maybe we come up, we take previous week's low, and then we want to have a nice sell-off, or we want to trade up to previous week's low. You know what I mean? Maybe a pullback, trade previous week's low, and then we continue up. It could be something like that. But the main areas I'm going to be watching right now is previous week's high, because it's right here. If I said previous week's low, I meant previous week's high right here. And the main draw on the sell side is we're going to be looking at previous week's low. So those will be our two scenarios for ES as well. So that's pretty much my plan. Pretty simple right now. Hopefully we can break out of this range, because it's just pretty ugly. I want to see some clear price action. But yeah, there's always trade opportunities to get. But another thing to watch out for would be some more SMTs with ES. But we'll have to see what happens going forward with the week. But let's run into the news really quick. Starting off on Monday, all we have is some orange folder news at 8:30. We have core durable goods, and this is all at 8:30. We have no major news. So since this is FOMC week, basically what I'm going to be doing is I will be on the charts, and if I see anything super clean, I will take it super de-risked, or I will be trading eval. But regardless, on Monday, I will be on the charts, just not like throwing a bunch of capital around. I'm trying to save my capital and be smart with it for the rest of the week. Going over to Tuesday, all we have is tentative Trump speaking. It's an orange folder event, but we have to see kind of what he's speaking about and what time he's speaking, just because we have to really be careful all the time of that. Then we have consumer confidence in Richmond manufacturing. This will be a normal trading day for me, depending when Trump is speaking. Obviously, if we hear anything about that and we update it, I'll update you guys. But basically, I will be de-risking regardless, because this is the day before FOMC. Now on Wednesday, we have FOMC. We have the federal funds rate at 2, and then we have the press conference at 2:30. Now, the way I trade FOMC, if you've heard me talk about it before, I try to be in and out of the market as fast as possible. So I find that the longer the session rolls around, like towards 11 o'clock, I find that for the most part, the volatility and the volume kind of dies down in anticipation of FOMC. So I like to be in and out of the market as fast as possible. So if I could catch something before like 10 a.m. or like around 10 a.m., that would be perfect. But regardless, I will be de-risking this day. I usually almost always de-risk on FOMC days, but I will be trading come market open. Now going over to Thursday, we have unemployment claims at 8:30. This will be a normal trading day, normal risk at market open. Hopefully we get a data wick to kind of trade with. And then Friday, same idea, core PPI, 8:30. Hopefully we get a good data wick to trade with. This will be a normal trading day at market open. So that's it for me, guys. Hope you guys enjoyed this one. Again, this is my chart on the higher time frame going into the week. So we'll see what happens. Let's have a good week, and I'll talk to you guys in the next one. Peace.